confused about how taxation works in Papua New Guinea? You're not alone. Many people find the tax system tricky. In this video, I'll break down the top 10 most frequently asked questions about taxation in PNG and explain them in simple terms. Yes, if you earn income in Papua New Guinea, whether from wages, business, or investments, you are required to pay tax. The only people who don't pay are those whose annual income is below the tax-free threshold, which is currently 12,500 kina. PNG uses a progressive tax system. This means the more you earn, the higher percentage you pay. For example, income under 12,500 kina is tax-free, but income above 250,000 kina is taxed at 42%. This system is designed so that higher earners contribute more. This is the tax that employers automatically deduct from your salary or wages before you get paid. It's similar to pay as you earn in other countries, and it saves you from having to calculate and pay tax yourself every payday. GST stands for Goods and Services Tax. It's 10% added on most goods and services you buy. If a business earns more than 250,000 kina a year, it must register for GST and charge it to customers. Not everyone has to. If you are only employed and your employer deducts salary and wages tax correctly, then you usually don't need to lodge. But if you are self-employed, run a business, or have more than one source of income, then yes, you must lodge a return. Individuals must file their tax returns by the 28th of February each year for the previous year's income. Companies, on the other hand, have until the 30th of April. If you need extra time, you can apply for an extension with the Internal Revenue Commission. You can claim deductions for things like approved charitable donations, legitimate business expenses, and contributions to registered superannuation funds. These deductions reduce your taxable income, meaning you pay less tax. A TIN, or Taxpayer Identification Number, is your unique number for tax purposes. You can apply for one at the Internal Revenue Commission office, and it's required for opening a business, getting a job, or even opening a bank account. If you fail to pay tax or lodge your returns, the IRC can impose penalties, charge interest, or even take legal action. It's always better to comply than to ignore your tax obligations. Yes, any income earned in Papua New Guinea is taxable, even for foreigners. However, PNG has tax treaties with some countries, which means workers can sometimes avoid being taxed twice on the same income. Taxation may seem complicated, but once you understand the basics, it becomes much clearer. I hope this answered your top questions about taxes in Papua New Guinea. For more simple explanations and tips, don't forget to follow PNGTaxfacts.